I can cover my rent and bills. That's all I wanted to be able to do. To me, it wasn't so much about anything other than freedom. For me, it was that idea of just being in control of what you do.
We are delighted to have Alistair Crooks with us here today from the Traders Support Club. So you've been trading for 22 years, I believe now. Correct me if I'm wrong.
I did check, and I think I've creeped over the 23-year mark now. Naturally, as humans, we tend to focus and react to what is going on recently.
One tweet from Trump is completely changing the dynamic of the market. We all know what happens when the markets start to crumble or there's fear in the market.
Now that potentially could be useful, but it could also mean that it's now influencing your decisions too much.
It's this kind of hysteria of sentiment that people are continuing to kind of weigh up the future, right?
Yeah, everyone's trying to predict with their short-term intentions what is going to happen in a scenario.
That radio silence allow you to know what you're doing right.
If you ever feel like you're rushing for a trade, like you're rushing for a bus, it's probably not a trade you should be in. If you're sitting there, you might be thinking, well, that all sounds great, Ali, but what if I've had a 6-trade losing run? But now you've got a reason to investigate what that might be. Like I said earlier, is that simply because
we all know our best trades are the trades that we've got the setup perfect on, and we know it, we feel it, everything aligns.
Because I've got a background from doing sport, I could see the correlation in terms of performance, discipline. For me, it was just starting to earn discipline. Did you follow your rules? Can you just do one day and say, yeah? And then it was, can I do a week?
The biggest problem that traders have, and we all have in life, is nobody wants to lose money.
Yeah.
If you can't win long term without losing.
Barely 20, who's potentially screaming like this because he says he's made 10 grand. And I'm like, if you are that excited about your wins, that tells me how emotional are you going to be getting about the inevitable losses you're having.
What do you think that has been psychologically the one thing that has built you up to be the trader that you are today?
Less is more.
Hello and welcome back to another episode of Two Blokes Trading. We are delighted to have Alistair Crooks with us here today from the Traders Support Club. Thank you so much for coming on and joining us here today.
Great to be here. Thanks for having me.
No, it's an absolute pleasure. So you've been trading for 22 years, I believe now. Correct me if I'm wrong, but
no, you're pretty much spot on. I did check, and I think I've creeped over the 23-year mark now. It feels like a distant memory, that's for sure.
Often when I talk about how long I've been trading for, it's almost like a reflection of my age, and I don't feel my age, that's for sure. Anyway,
no. I say this. Funnily enough, we were talking off air about things that happened to you. It's certainly as I'm approaching the big 50, my body doesn't want to work quite as well as it used to. The mind still wants to do everything it did when I was 25, but the body's saying, maybe you just got to take it a little bit easier.
Yeah, 100%. And if only you had to listen to that devil on my shoulder, 2 days ago, I wouldn't be sitting here with a cast on my leg. But Here we are. But look, 22 years, like I said, is a long time. That's 2 bull markets, bear markets. Like it's there's lots of ups and downs. Obviously, right now we're in a pretty crazy market at the moment. Tell me, obviously, a bit about your background first of all. Let's start there. But I'm interested to know how you've utilized the previous bear and bull markets to the current market now, and how you've adapted as well.
I think that's a great question. I think for me, I've learned to trade very systematically. So one of the things that's helped keep me consistent over the years is I don't trade purely mechanically, but there is quite a system behind what I do. And the flexibility in that system allows me to trade regardless of whether the markets are, really not going anywhere, or we're seeing big swings in different directions. Obviously, the results shift in that scenario, but I think what I'm noticing with what we're seeing right now is it's reminding me a little bit of 2008, where markets are running away on a daily basis. And for me as a trader, I learned very early on. I got into the game, almost back when we were, just as the .com, crash was happening, and retail trading was a very different space back then. you had scenarios where your charting software and your broker weren't even linked. So as a day trader, you had 5-point latency. You would see your chart move and the broker not move. So there are a lot of things that I think I've traded or had to deal with that other traders probably haven't. So I sound like the old grumpy one. I say, well, back in my day, it was a lot harder. But I think what that does is it makes you resilient. So for me, really what I'm seeing now in terms of price movements is we're seeing a lot of erratic movements. We're seeing, big daily ranges. Now, as a swing trader now, that isn't something that I'm jumping in on. Go back to 2008. You had similar scenarios where you'd leave the euro. If you weren't around for a day, you'd have a 250-point move and you've missed it. So one of the things I learned, especially in that cycle, as I was starting to get more adept at what I was doing, was you're just going to have big days, and sometimes you're not going to catch any of those moves. And I think it's the misconception of the traders that have got less experience that because of what's happening right now, we're all sat there, banking money left, right, and center. I mean, me and my students have had a good month, but that's not because we've jumped on the moves that we're seeing. We already had trades that were setting up, and some of those trades were short dollar pairs. Well, we've had dollar weakness, so we've done really well. Some of the guys that I work with have got more experience. Some of them have got less experience. So the less experienced guys have essentially just traded the setup as it is, a fixed 2-to-1 target. Some of us have said, look, we believe that the dollar's going to weaken overall. What we're going to do is we're going to hold that trade a little bit longer. So we've ended up with a couple of 4-to-1 winners that previously we wouldn't have necessarily made the call. But those trades 2 or 3 months ago, 3 or 4 months ago, could have easily been 4-to-1 winners anyway. So,
well, history tends to repeat itself, and like I say, you said going back to 2008, we all know what happens when the markets start to crumble or there's fear in the markets. We know what investors do, and having that historical kind of experience in the markets and understanding, why these moves are happening and how to hold your nerve in certain situations, but also allow winners to run and actually continue to get that momentum in your trades and get those big winners. We've seen gold, we've seen dollar. There's so many, even like oil back in 2008, like we talk about foresight and having crystal balls and so on, but at the end of the day, like, it's not rocket science to understand what markets are going to move with certain situations that are happening exactly economically.
And I say to people, I work with people who are investors and traders, or some people that are traders, and somebody like me who's an investor and a trader. Those two disciplines are separate in terms of what I'm executing on and how I'm looking to trade that. But the common theme that I see is most traders, when you see this volatility, their space and time horizon in terms of their view of things, it shrinks. So suddenly people go into this almost panic mode, like I've got to capitalize right now from what's going on. Well, there's a bigger theme at play, and like you said, history repeats itself. But for me, this isn't about jumping in on gold because I think gold will go up because the dollar's weakening, and this cycle of a dollar weakness could last months or even years, or it could be the end of the dollar, it could diminish over time. That doesn't mean therefore as a trader I'm going to jump in on gold. I'm still going to wait for the appropriate setup. It just means I might stick that trade out for longer because of my overriding belief. But as an investor, that might mean that I decide I'm going to hold on to my gold for another 5 years rather than sell half of it now or whatever. So, but the common theme I see is that people tend to either think that what we're experiencing now is going to continue, that this is now the new normal. Well, this will happen for a period of time, and then the markets will cycle into something different. And like you said, history repeats itself, but it's cyclical. Nothing stays the same. Nothing stays the same forever. And what we're seeing right now will not be the status quo for the next 10 years. We will cycle into something different. And it's being able to understand that, I think, and balance the need to, or the want to jump in and be opportunistic versus just trying to grab something because you don't want to miss out. It's a fine line between taking opportunities and acting, in a state of FOMO, if that makes sense.
Yeah, 100%. And I suppose in terms of, different traders that you're mentoring, because I'm seeing it as well, but in terms of what you're seeing personally, the guys that are maybe newer traders to the guys that are more experienced and have been through this, are you seeing a big difference? It's a learning curve for people at the moment. It's a learning curve for me as a trader for 15 plus years. Even though we have this historical information, we know our setups, we know our risk management, we know everything around what we're doing and how we're going to do it. But sometimes the correlations aren't there. Things aren't making sense in some markets, and we're seeing we're seeing a lot of volatility. So one minute we're like, okay, one tweet from Trump is completely changing the dynamic of the markets, or one announcement, or whatever the case may be. Like one minute we're seeing, Trump strong arming, tariff changes. Then he's coming back and, rescinding them and saying, okay, I'm going to start being nicer to but now people are kind of fighting back, and, everyone, like, it's this kind of hysteria of sentiment that people are continuing to kind of weigh up the future, right? And that's what's really making the market so volatile at the moment.
Yeah, is everyone's trying to predict with their short-term intentions what is going to happen in a scenario that for a lot of traders and investors is completely new. So I think the key is to make sure that you stick to your framework. So even if over the next 2 or 3 months your performance drops because you've got a specific strategy and that hasn't worked well because the market conditions have changed, it's not a case of saying, right, well, I'm just going to throw that all to the wall because it's not working anymore. But you've got to look at it and say, I might experience a drawdown that is slightly bigger than I've experienced before. And then I've got to look at the data. And what I get my guys to do, and what I've been doing for years, is make sure you're looking at the data so that you can actually see whether or not the losing runs are getting worse, whether or not it's because your stops are too tight, and actually the overriding methodology is good, but you're just getting stopped out too much because you haven't factored in that ATR has gone up by 300 points on a market or whatever it is. So it's being able to not throw everything out because it doesn't work anymore because you've had 3 or 4 more losers than normal. But in the same breath, you can't just sit there and mindlessly keep trading a system or a setup that you haven't got any data on in the current market conditions. There'll be a lot of traders out there that, even the ones that have diligently backtested haven't backtested through conditions like this, where the volatility has been like this, and no system's exactly the same. I remember and things I learned from my first mentor was, he said, markets are always the same and they're always different, and markets are always different and they're always the same. It's this idea that there's a rhythm to everything that you see, but no day is the same. Yes, you go through periods where ranges are smaller, less is happening. Now what you're seeing, like you said, is one tweet is shifting the market. I think it's fascinating at the moment that the last couple of weeks there hasn't really been that much positive news, but as soon as Trump says something like he may reduce the tariff, the market acts as if it's the best piece of news ever. And that was something that you saw a lot of in 2008, which is fairly neutral news, because there'd been so much bad news and so much uncertainty. Even a neutral news announcement or the possibility of something positive would shoot the market up the other way. Yeah. So it's understanding things like that, is that the market is going to be hypersensitive. And I say the market, main indices, gold, all of the, all the major players. The markets are going to be sensitive to anything, but they're also going to probably respond overly positively in the short term to a piece of news that isn't actually that good news, because they want that feeling of certainty back. Markets just don't like uncertainty. That's the key thing.
And within that, there's 2 things actually that you brought up. And one was going into a drawdown that I want to discuss, but also mentorship that I'm going to follow on with as well. But firstly, drawdown. Okay, especially for tips and so on for traders that are maybe new or intermediate traders, and how to understand that. Now, there's 2 things to that. Obviously, it's your own trading account. It could potentially be when you're doing managed accounts, how you deal with that, how psychologically, when you're getting messages or emails or things that, these are the things that can really change you as a trader. And that's why you almost need that kind of black room, that radio silence, allow you to know what you're doing right. You know how to manage your risk. You know how to trade out of situations, but you need to be kind of left in that solitude of doing that, outside distractions and so on can certainly tweak how you're doing things, and that can certainly hurt your edge for sure. Would you agree?
I would completely agree. I think one of the things that traders, I come back to the idea of recency bias. So naturally, as humans, we tend to focus and react to what is going on recently. So the news. So we're far more likely to pay more attention to the news now than we have done. Now, that potentially could be useful, but it could also mean that it's now influencing your decisions too much. And then also looking at the result. So let's say a trader is going through a period of drawdown right now. The first thing I would say to them is you need to compare that drawdown to previous drawdowns that you've had, because as a trader, it's very easy to forget what happened 3 or 4 months ago. You forget the 4 trade losing run you had, last year, but compare that. So are you seeing a drawdown at the moment that is extensively greater than previous ones? This is where backtesting data, a lot of people say, backtesting, it doesn't show you what is going to happen in the future. I get that. I've never said it is, but it's a point of reference for you. And for me, there is a strong link psychologically between how much data a student, me, a trader, anyone has on the strategy that they trade, and their level of resilience when they are going through periods of drawdown. So I would say use your data as a frame of reference. Now, if you're sitting there, you might be thinking, well, that all sounds great, Ali, but what if I've had a 6 trade losing run, and the worst losing run I had at any point during the 2 years I've tested my strategy is 4? I'm like, okay, you are worse off, but now you've got a reason to investigate what that might be. Like I said earlier, is that simply because ATR and ranges have got so much bigger, there's so much more volatility that you're getting clipped out of trades that normally you wouldn't have done? Okay, so now you've got something that you can look at that's personal to you about what's going on with your results, rather than just trying to watch more news, taking more information in the hope that that's somehow going to improve what you're doing. And that links to what you were saying, which is this idea of, sometimes there can be just too much going on, and traders got, too much going on. They don't want to just sit and hide away and just go, I'm just going to keep pressing the button. But in the same breath, they don't want to be taking on too much. And I found myself doing it. You just find yourself watching more and more news because you're trying to get an idea of a narrative, of a timeline. But I've got the experience to be able to take that news, take that information on, and not necessarily react. The challenge a newer trader has is they're more likely to react because they're taking more information in.
Yep, 100%. It's the reaction that generally hurts. It's using. I suppose the beauty of traders like ourselves. I suppose we've got the 15 years, 20 years, 23 years experience in the markets of understanding, going through the roller coaster that is trading, and being able to kind of level that out, in as much as we can. And talking about mentorship as well, you spoke about your mentor. I mean, I know I'm very much a part, like I've kept that a big part of my mentorship, and I'd be a big part of what he's taught me, and I've followed that through my whole trading journey. How much do you think that you've kept from your mentor to this day, and how that's kind of transformed your trading?
That's a great question. I think that it's funny. There will be times, funnily enough, when I'm mentoring somebody else, or I'm doing a group training, and something will come up because a student has asked a question that stimulates the response, and I was like, wow, I've remembered something that I've kind of, that's probably sat there in the subconscious. To think about it now, I'd say there's probably 2 or 3. I think the first one was that he was able to highlight my blind spot. So my blind spot was data. So I was the guy that would have the intention of recording my trades and journaling my trades, but I didn't really know quite what to journal. And, I was sort of, well, I get that I need to know my numbers, but what do I actually journal? How do I make that all work? And then once I realized there was effort involved in that, it was the realization that my personality was more about being in the markets. So I was never a fear-based trader. I was always a greed-based trader. It was like missing out, FOMO, wanting to get back to break even on a daily basis. I would have all these little justifications and reasons to basically overtrade, or to, as I would say, scrimp on a trade. So 2/3 or 3/4 of the setup was there, but the last little bit wasn't there. And in the moment, I thought everything was right. So what was interesting was he encouraged me to start recording all of my trades. And I got to the point where I was just in this sort of, I call it the break-even cycle. You've probably had it with people you've spoken to, where you make a bit of progress, then you're back to break even. Because what was happening was those revenge trades were just costing me too much. But in the time, I wasn't realizing it. And we went through a simple process, which was we looked at the trade distribution. So when my trades were happening, and the average number of trades in a day. And obviously the average you've got to be careful of, because some days there are just more trades setting up than others. But we looked at the data, and what was fascinating is when I had at least two losing trades or more in a morning session, so this was back when I was day trading, I would average nearly 5 trades that day. So what would happen is on some days that was valid because there were legitimate setups coming in the afternoon, but we were able to see a trend, and it was obvious what was happening. It was the fact that I was trying to make back the losses in that morning by overtrading in the afternoon. Now, that's nothing earth shattering. It's not rocket science, but it took my coach to be able to say, look, this is what's happening. But the interesting thing is it took me to actually record the data. He wasn't going to do it for me. So I'd say that's the first thing. It was that blind spot for me, which is I knew data collection and journaling was important, but I just never got round to it. It was always something that was on the list. And for my type of personality, which was very much gun-ho, be in the market, you got to be in it to win it, those types of thoughts and mindsets, he was essentially saying, right, I've got to put the rein, I've got to find ways to sort of rein you in a little bit. But with some traders, it's very different. They actually need a bit more of a push because they're more fear-based. So I would say that's probably the big thing that he did. But the phrase that always sits with me is he said, every trade should feel like it lands in your lap, that you should be ahead of it. If you ever feel like you're rushing for a trade, like you're rushing for a bus, it's probably not a trade you should be in. You need to feel that feeling that it's coming to you, it's landing in your lap, which isn't very systematic or scientific, but I totally get it.
It's huge. And, it's something, even you saying it out loud is just, of course, it makes sense. We all know our best trades are the trades that we've got the setup perfect on, and we know it, we feel it. Everything aligns. That kind of gold is rushing up, quick buy it. You're always going to buy it wrong time in that situation, and that's where the new traders really kind of get it wrong. And I suppose, was that the point where you went full-time trading, and how did you adjust into that?
Yeah, I mean, for me, full-time trading, it was something because again, my personality, I dabbled with full-time trading before I actually got the help I needed. But I was probably about 3 years before I was actually seeing any kind of relative consistency. So at the time, I was working a factory job because I could work early in the morning. So I did 5 in the morning through till about 1:30 in the afternoon, and then I'd rush back home. And the idea was I've earned enough to pay the bills. And I always say, for me back then, I was in my 20s, a single guy. I'm in a 1-bedroom flat. I didn't have 2 kids, a massive mortgage, 2 cars on finance. So my goal was, can I just get to the point where I can cover my rent and bills? That's all I wanted to be able to do. To me, it wasn't so much about anything other than freedom, because the reason I got into trading in the first place was I'd been involved in a business that was very successful, sold that. And then the second business I got involved in went to the wall. Now, prior to it going to the wall, I fell out with my business partner because I wanted to keep pushing, and I wanted to keep pushing the business forward, and he wanted to pull away. Now, ironically, looking back with the benefit of hindsight, he made the right call because it was heading in the wrong direction. But the reason I got into trading in the first instance was because for me it was that idea of just being in control of what you do. It wasn't because I had a love of charts, but for me, very quickly I realized that I started to just obsess and just think about it all the time. And for me, it was all about understanding charts. And because I've got a background from doing sport, I could see the correlation in terms of performance, discipline, and training. So for me, that was what drew me in. But yeah, full time for me was about 3 years in the making. And in terms of me trading full time and looking after myself, that was about a year and a half that I did that. And then I remember I moved in with my new partner at the time, and she was a sales director, and she was off traveling around Europe doing all these cool things. And I can remember being a bit like, I'm just sat at home trading, and I still loved it. But for me, just sitting around and trading the whole time wasn't enough. So that's when I started getting a bit more involved in teaching. But for me, the initial goal with trading was I just want to get to the point where I don't have to ask anybody. I don't have to go to anyone else for my rent and bills. I don't need to have a job.
Sure.
Yeah, but I would say that's where it started to get consistent. The other hurdle I had, which I think is really interesting because it relates to the whole prop firm thing that is so big at the moment, is I set myself the goal of, I think it was £650 a month. Back then, that was enough to cover my rent, cover my bills, and just about scrape through. But what happened was I kept getting close. So I'd get to like the 550 mark and then it would fall away. So even after all those learnings, one of the things I realized, and this was something I realized again through feedback and just talking it through with my coach, was that as I got closer to this kind of monthly goal that I wanted to hit in terms of numbers, it would come crashing down or it would fall away. And one of the things he said is, the market isn't there to pay your rent and bills. The market doesn't have this arbitrary line in the sand at the end of the month that says, here you are. How do you know that all of the trades you need to pay your bills for this month, the next month, and the month after aren't going to come in the first week of the next month? And that was a real highlight for me. It was the market isn't a paycheck. It isn't a cash register. You've got to trade when the trade's set up. And again, that was me. Again, psychologically, I was forcing it because I wanted to meet this arbitrary line in the sand. And that was a real shift for me. And it made me realize, actually, I need to go back, get a bit more money in the bank so that I'm not trying to hit a monthly paycheck. So it might be that nothing happens for 3 months. Even as a day trader, I'm pretty flat because I'm just not making headway. But as long as I knew I was following my system, and the system had the capacity that over a year it would give me the numbers, the next 3 months I make 9 months worth of cash in the next 3 months. And then it's great, right? Take out 6 months. And that's how I did it. And I think a lot of traders, especially new traders, could learn from that, which is the idea of, these arbitrary targets that prop firms have. Yes, I understand if you roll over and you blow that out, you've got to go again. But one of the things that I think I've been able to do so successfully with other traders and help them pass these is I get them to stop thinking about passing the challenge or hitting the next pay level. It's actually structuring the strategy so that if it takes you another 2 months to get to the first payout, you're actually probably doing the right thing. Because I see so many of these guys, and it's the psychology of, right, I've passed. And it's like suddenly the idea of 10 grand turning up in their trading account or getting a 10 grand payout. Well, they're thinking short term again. All they're thinking about is how quickly can I get to this next 5% or 10% target. Whereas if they were sat there thinking, hang on, if I hit 3 targets in the next 18 months and I don't bail out, I've passed the challenge, I don't bail out over the next bit. If they're going to allow me to manage more hypothetical money over the next year, then one payout could be 50 grand. Because 90% of the traders out there that pass the challenge are thinking about payout number one. Like I was thinking about month number one hitting my return. But if they were thinking, where could I be in a year if I just was really steady? I could be managing way more money than I've got now, or way more capital, whatever the fund is doing. And then I only need one payout, and that covers me for the entire year. So I think it comes back to that idea of less is more, and just be wary of arbitrary targets. To the achiever personality, it's like, yeah, I want to get to 10, I want to make 10% a month, but you could be doing everything right and the market's just not going to give you that. It's just not what's there for the strategy you trade.
It's a misconception, and there's lots of them out there. I mean, like, obviously traders need to understand why they're getting into trading, what their goal is, and they need to align that with the reality as opposed to the reality that people are putting on Instagram with their Lamborghinis and absolute BS that's out there that drives me absolutely insane. But you have to align your goals in the right way, go into trading for the right reasons. Understand that this is something that if you want to go and learn how to drive a car for the first time, if you want to learn any skill in the world, it's going to take you a certain amount of time, and you have to understand what you want at the end of it. What is your goal? What is your primary goal from doing this? Is it financial freedom? Sure, great. That's a great idea, and that's certainly a path that potentially you can get there, but you're not going to get there overnight. You're not going to get there tomorrow. It's something that you have to understand, that this is a journey that you have to take. There's a process, there's progress, and mentorship massively helps certainly shorten that journey if you get the right mentor, for sure. There's no doubt about it. And tell me a bit about how much, I suppose you're a trader. You said you were a day trader. You're now kind of a swing trader. What's your kind of techniques that you use in the market?
It's good. So the way that I will approach things is I use a filtering process. So I have essentially 30 markets that I will consider. So it's like like anyone would call it like a watch list, but I'm not watching every single one of those markets because it's as a swing trader, it's too much. So what I'm doing is I'm filtering down those markets to probably 5 or 6 that will meet a specific condition. So you can use gold as an example right now. Gold is in a with the trend condition. It's that, there's nothing in the way. There's no support or resistances. It's in a, it's clearly in a with the trend condition. So for me, I will look at gold and say, if it meets that particular with the trend condition and maybe 5 other markets are doing exactly the same thing, then all that's going to happen is I'm going to sit on those markets and just watch them until they give me a high probability entry. So where I think a lot of traders are going wrong is they will have an entry system. So some sort of consolidation or some sort of pattern or 5 different patterns that they're trying to chase. And the problem is a lot of the time those patterns are not necessarily in the right condition. So they're not looking at the market and necessarily trading that pattern correctly. So for me, it's about saying, right, I need a high probability entry setup in the right condition. So as a result, I go down the approach of I will have more markets that I filter down. Whereas some of the guys I coach, they will have 1 or 2 markets, but they will have 3 or 4 different entry patterns for smaller amount of markets. So that's the way that I approach it. So the 2 that I look for it's a very specific with the trend condition setup. And I also have a trend line break setup that I use. Now, again, I'm not just drawing trend lines randomly anywhere on the chart and as soon as price breaks them. I'm looking for the market to be in a very specific situation. And then once that trend line in that situation is broken, then I'll look to build a position around what the price action does. So for me, I will very rarely go in at 1 or 1.5% in one go. I will build my position as the entry develops. Yep. And that allows me to then, if I've got a longer term view on that particular market, sometimes I won't have it. So I'll look at, for example, classic one is dollar Swiss. We had a very, very specific trendline break set up, and then our standard trade came along, but I built the position so I was able to hold some of that position as the dollar started to weaken. So I'll try and get into a position where I can split my trade up a little bit so that if I want to run part of it for longer, I can. And that was something I wouldn't necessarily recommend to newer traders, but something that I will do. So yeah, that's how I work. So I work on a filtering basis of saying, yeah, I've got 30 markets, 35 markets I could trade, but actually I'm only really eyeballing about 5 or 6 and then just waiting for the setup. So I spend, as I say to anyone that I work with, I spend a lot of time just waiting. I'm spending a lot of time waiting for the right setup. And the way that I trade, it can be a little bit like buses. Nothing can happen for 2 weeks, and then suddenly I've got 3 setups in the same week. And then, go forward a month, and it's all just ticking along. It's one trade, and then the next week it's another trade. So it can be quite random in terms of when I execute, but it's not random in terms of what I'm executing on. It's very, very specific.
35 marks is quite a lot in terms of trying to understand. I mean, you trade kind of Forex indices, is that right? What are the markets?
Forex. So mostly, major pairs, some of the major crosses, gold, silver, oil, and then index futures. So that's it. But again, the idea is that I'll be looking at probably only 5 or 6. So and it's usually a longer period of time before the setup comes along. So the nice thing is I'm getting to know that market, and on those setups they are more data driven. But as I've said, if I'm working with somebody who's gonna be more day trading orientated or more intraday swing, then they may only be working with 5 markets. They know them a little bit more intimately in terms of how they move, and they're looking for they've got more reasons to get in, whereas I'm only looking for 1. So that for me suits the way that I want to trade. Whereas when I was day trading, I was only trading S&P, euro, cable, dollar, yen. So I only had 4 markets, and I knew those markets intraday movements more intimately, which as a day trader, I believe you need to do. So, for sure. But I will be keeping abreast of what is going on, especially on major indices, major currencies. So whenever I'm doing a daily update for my guys, the first 5-8 minutes of that daily update is how are all the major markets moving? What are the correlations between the two? And then the second half of that is going in and saying, right, how do we look at what potential setups are within the right conditions for those markets? Because that's the data that we have. It's not, do you trade an ascending triangle on Euro New Zealand? It's you only trade that setup if the market condition is right at that time.
Sure, and kind of answers some part of my next question is, consistency. It all boils down to consistency, especially for new traders coming through. It's absolutely key to try and find that level of consistency. And what tip would you give? I know you've explored it somewhat, but what other tips would you give for traders coming through that are just really struggling? Their roller coaster ride. Kind of getting the wins, getting the losses. I have my own way of helping people or teaching people, but what's your view on that, and how do you think that you help your traders, or maybe even a case study that you've helped somebody?
It's a great question. The answer, if I'm working with somebody closely, is it varies. It depends on where they are in their journey. Certainly for the newer trader, I think what I'm seeing a lot of at the moment is this idea that technical analysis can predict the market. So it puts bums on seats. So you've got your Lambos over here. Oh, I want this fake lifestyle. And then the next one is, but this technical analysis is like a crystal ball. Well, what I found is that it's more important, whatever analysis process you use, that you're consistent with it. So one of the other subtle things is traders will often make their technical analysis fit. So I say, when you're sitting down, make sure you're using a minimal amount of technical tools, so you're not using too many different things. And the idea with those analysis tools is to give you a map of the market. And then initially, if you've got a systematic entry that's more ABC, so your analysis is more of a framework, so using certain tools, trend lines, support resistances, supply and demand, whatever it is. If that's a framework, i.e. there's an element of repeatability to it, then you can measure it and you can feel more confident. But if one day you're dragging in Fibonacci because you're trying to, you never use it, but you want a bit more certainty in what you're doing, then you can't measure that. But then when it comes to entries, if you can be really systematic and have the discipline to say it needs to do A, B, C, almost like tick it off as a checklist, what that does is it takes away that flexibility of being able to be a little bit flexible and go, well, the entry's 90% there, and I've got a view on gold, and I think it's going to go up because of what's going on in the market, so I want to go long. Somebody like you or me, we've earned the right on that flexibility. So we can forego the candle doing exactly what we want because the bigger picture fits, and we've proved to ourselves that we can be disciplined enough to give ourselves that flexibility. Whereas I think for traders in the early days, as painful as it is, actually being extremely disciplined, even if it means you miss out on certain trades, is actually a good thing. Because as a trader, you're always missing out on something. We're talking now, something's going on that we could be trading and we could be making money on. So actually learning that art of missing out and being disciplined in the early days, it's almost like if you can prove to yourself that you can stick to that and you can record the data and you can build up a data set, then you can earn the right to be a little bit more flexible once you're able to show that level of consistency. So I think for newer traders, it's simplify your analysis, have a set of literally tick box reasons to get into a trade, and then measure that and measure your discipline. It's a really hard thing to do, and it's usually the thing you don't want to do. If you're really good at filling out a spreadsheet, but you overthink the trades and you look for extra reasons, then you can probably identify yourself as an under trader, and you need to probably just have less reasons to trade. But if you're somebody that is finding yourself in the market, you're trading, you're constantly trading, you're constantly jumping on anything that's going on, you probably need to say, right, I need to be a little bit more rigid with the rules that I have. So again, that's what I'll do, is I won't just simply say to anyone, right, this is what you need to do. I'm going to ask them a series of questions, find out where they are, get them to trade something, especially in the early days, very systematically, and see how well they do it. And some traders can follow a system really well. Other traders, they can be very, very good at analyzing the market, but it only takes a couple of trades to go against them and they break all of their rules. It is bespoke to each person, but I think in the early days, being a bit more systematic and a bit more disciplined will benefit you long term.
Sure. I suppose moving on to psychology of trading, and how you adapted your psychology over the years of trading, and how you've kind of grown this aura of confidence. That we know what you're doing. You're strong in your ability. But where do you think that changed for you and that tweaked? Where do you think that mentally that you got over that hump, that you really are fully in control of your psychology?
I think the first, another great question. I think the first moment was when I realized that I thought I knew what I thought trade by trade I was executing correctly. So for me, it was data. Now, it isn't necessarily the same for every trader. A lot of traders that email into me or email into Trader Support Club, I'll send them an email back saying, are you tracking your trades? And I sort of get, yeah, sort of. And most people aren't doing that enough. But not everybody's in that boat. Some people, it's more just they just struggle to maintain discipline. So mine was very subtle. So it was when I realized that I thought I was trading in line with my strategy, but I was revenge trading, and it was the very subtle elements of missing or getting in a little bit too soon or not waiting for the final entry confirmation. So for me, it wasn't so much what I wasn't doing by not waiting for that entry confirmation. It was the fact that it was the data that was giving me that clue. So that was the first thing. So that was an external element. Data isn't, directly your mindset, but being able to realize where I was going wrong and actually say, well, if it wasn't for the data, I wouldn't have had that realization. I was like, right, there's a link here. And there is a strong link between the amount of data that you have. And then for me, it was just starting to earn discipline. So I was like, right, I just want to get to the end of today and be able to give myself a green tick. I do this with students now. I said, yeah, we can get into the weeds of what was it or what did Trump say, but did you follow your rules? Can you just do one day and say, yeah? And then it was, can I do a week? So regardless of the result, because most traders, especially early days, we're attached to the result. We feel good because at the end of the week, we've made money. I said, can I just get to the end of the month and honestly say that I can give myself a green tick for every single day that I've traded? So it was moving away from being results orientated, which is natural, to being process orientated, and essentially
almost. Yeah.
Sorry?
Right. It's like building a routine, right?
Exactly.
Yeah.
So for me, it was, can I make the achievement for the week or the month? Because especially when you're a day trader, a week is a long time. Can I make the achievement and the result being the fact that I've stuck to my process? If I'm 3% down on Friday, but I've got a tick for each day in terms of every trade was executed according to my plan, and I didn't fiddle with the trades, I didn't move my stops, didn't do anything I shouldn't, then that's been a good week. And even though you get to Friday, you're like, it was, you haven't necessarily made money, and then you start thinking, well, I bet everybody else is making money. Well, actually, they're not. This is another fallacy that everybody's making 2 or 3% every single day. It's just not how it works. Mm-hmm. So yeah, that was the big one for me, is making the process of trading my achievement and doing that correctly rather than the result. And it's like a lot of things in life. If you focus on the process, it's no different than health and fitness. You focus on the process, the result will come, and there's usually a lag. So it's being able to be okay with the fact that it's better to get to Friday being down -3 but 5 green ticks than being up 3% but have broken your rules and just got lucky. So sure. I think it's conditioning. So when you said routine, I'm very big on routines, I'm not big on like this, these miracle morning things where people get up and do 1,000,001 things before they sit in front of their screens. You've got to find a routine that's right for you. But routine and discipline and seeing and focusing on the process was huge for me.
And you believe that's what built your edge in the markets?
Yeah, I think so. It's being okay with not making money that week or that month, but by the end of the quarter, you're up 26%. That's an insane return. I know some people were listening to this who would say, well, I can make 100% in a quarter. Yeah, but you're probably risking too much. You won't be around very long to do it. To do that, but realizing that what the result is per week. So for me, it was about being okay with being wrong. And then over time, it's just saying, right, now that I'm focused on the process started becoming more automatic. So being disciplined didn't become such a kind of weight. I see this with guys that I work with. It's like it exhausts them to get through a week without breaking their rules, because it's not normal, because they're reacting, they're results orientated. And again, it's like building a habit, or an addict coming off of drugs or coming off of alcohol. You've just got to do it. You've got to be able to do one day. And then once you've done one day, you've got to be able to do 1 week. And for traders and discipline, I think a lot of it is they're just addicted to either the result or having a winning day or having a winning week. And if they can detach themselves from that. Now, the trouble is most traders want to detach. They go, well, yeah, would you like to get to the end of the week and stick to your rules? Nobody wakes up in the morning and goes, no trader goes, today I'm just going to mess it all up. every trader wakes up with the intention of doing everything right. But if it isn't happening, then you've got to flip the switch. And I think you get used to down periods. I think the other thing is, if I'm working with a new trader and they come in and they do everything right and they hit 5% and it's the end of the month, I'm almost more nervous than if they did everything right and they were down 5%, because at some point it's going to happen. They're going to have a drawdown. They're going to have a period where it goes against them. And that's when you learn more. So I always say to a trader, let's look at your data. And if you've had 5 or 6 losers and then that next trade is your 4-to-1 winner, it's that trade that made you a trader. It's the one that you were able to stick to that target even though you've had a losing run. That's the trade that makes you a trader. And you have to cycle it. You don't learn everything there is to learn about drawdown in the first one you have. You've got to go through it a few times and thicken your skin. And then it's often those 3 or 4 trades after a losing period where you need to maximize profitability. And it's those trades that the newer trader starts thinking, oh, should I, shouldn't I? Or, suddenly they brought in a new strategy and then that strategy starts losing, or they tweak the system.
You're never going to have an edge. Exactly. You're never going to build it because you're going to continually, go through a cycle. And big thing for me as well, Alistair, is like trying to get people to think objectively, like almost like kind of robotic process, but not robotic in terms of understanding what's going on around you, whether that's fundamental, sentiment, technical, understanding all the everything that's revolving around you, but also thinking objectively when it comes to the trade, having no kind of trying to detach yourself from the value of the trade, more about understanding the process. And what the biggest problem that traders have, and we all have in life, is nobody wants to lose money. If money falls out of your pocket and it blows away in the wind, you're going to be pissed off, right? I mean, like if you put money on a trade and you lose, you're going to be pissed off, but you can't be, because it's you have to lose to win. I say this all the time. And unless you can accept losing, then there's no point trading the financial markets, because you can't win long-term without losing. It's as simple as that. You can't. You can't go into a day thinking that you're going to get to 5 trades or 3 trades or however many trades and think you're going to win all of those trades. The only way that you're going to profit through that day is, or that week or that month, let's say, is by having a certain amount of losing trades, because that comes with the process. And if you can think objectively, if you can take feelings out of the process, and you can have your targets in place, like you said, we have a process, and that's when things start. You get clarity in what you're doing, because you're not going through this roller coaster ride of emotion where everything's taking over your thinking. You almost get a fog overview of what am I doing? At least then when you get to the end of the month, if you think objectively, you go through your processes, you can look back and go, okay, these are the mistakes I made. Why did I make them? How do I improve? And then you move on and continue that journey.
Yeah, I love what you're saying about the idea of focusing, on you've got to be able to lose to win. And I see TikTok videos where you've got a kid who's probably barely 20, who's potentially screaming like this because he says he's made 10 grand. And I'm like, if you are that excited about your wins, that tells me who knows whether that win is true or not. But if you're that excited about a winner, then how emotional are you going to be getting about the inevitable losers you're having? And, you're not learning anything from watching that. I realize it's entertainment and TikTok isn't necessarily there to teach, but it's all of these things that if you're doing this correctly and have been doing it for the years you realize that, the emotion is irrelevant, because that winner will, that winning run. So whether it's 10 grand on one trade or 10 grand over a month, that run is coming to an end. And it's the same the opposite way. When you're in a losing run, that losing run is coming to an end. But if you start fiddling with what you're doing or bringing in something else, then that's right at the moment that you've lost your edge, like you said. So
let's say if you had one thing that you could pass on to generations to come, that you believe has been the one thing that's really gave you that one particular edge, and going away from the process, going away from, you as a person and how you've built maybe that resilience, over time, because you definitely need resilience as a trader. But what do you think that has been psychologically the one thing that has built you up to be the trader that you are today?
That's such a good question, because it's hard to pick one. It's very hard to pick one thing.
Give me a couple.
It doesn't apply. Yeah, it doesn't necessarily apply to every trader. I think specifically for me, less is more. So obviously I swing trade now. I used to day trade, so I would obviously trade more as a day trader than you will as a swing trader. That's just how it is. But once I started to trade a little bit less, now I didn't sit there going, right, I've got to trade less. But the result was thinking that by doing more, learning more, spending more time on YouTube is automatically going to make you a better trader. I think you can relate it to education. You can relate it to trade execution. And if I speak to the traders that I know and have known for best part of 10, 15 years, some of them have been in the game longer than me. None of them are sitting there firing in trade after trade after trade, whether it's as a day trader or a swing trader. So I think having this idea that from an output point of view as a trader, less is more, but it's also this constant idea of refining. Your strategy will not be exactly the same in 15 years time. But the majority of traders that I've worked with, the majority of traders I know, are probably trading less now that they've gained that level of experience than they did in their first 6 months. So if anyone's listening to this, it's almost like if you went out thinking by default, I'm probably trading more than I should, that question will open up other questions about how you're operating. Are you trading too much because you're results orientated, like we've been talking about? And actually, if you focused on the process, you'd by default be placing 3 trades a day on average rather than 6 trades a day, or 2 trades a month rather, whatever the numbers are. So I think, it's almost if you can look at it and say, is there a way that I can do less and achieve more? And it's not about being lazy. It's not about trying to cut corners, but it's just, is there ways that I can refine what I'm doing that I'm getting more from it? And I don't need to be trading all of the time, regardless of the style of trading that I do. That doesn't define me. That doesn't define the success.
I agree. And I think that's a fantastic tip for any traders listening in. I think, at the end of the day, you can identify what you're doing wrong if you're doing less than if you're doing more. Because if you're doing more, you've done probably 10 different things that you would have done if you're trading less. At least you can identify, what you've done wrong with the fewer amount of trades, especially starting out. But Alistair, it's been a fantastic podcast. I really enjoyed your company today, and I really appreciate you having taking the time to come on with us today. So thank you so much. I really appreciate it.
Thanks for having me on. I've really enjoyed it.
It's been an absolute pleasure. Take care.